During the time when we were working on the second edition of the book, I was serving as the lead independent director of Health Management International, or HMI, a listed entity on the main board of the Singapore Stock Exchange. Finance theories came alive while I was serving in my board role, and I witnessed the life cycle of HMI, a public company becoming private. When financial management is taught, topics such as valuation, merger and acquisition, debt and equity raising are often taught separately. However, when we witness the life cycle of a company going through listing and privatization, the different areas of financial management were not practiced in silos, but were very much integrated. In addition, the enterprise value can be much higher when seen as the sum of its parts than as one holding company. We certainly hope that with the various examples shared in the textbook, students will get to appreciate financial management in practice. Learning about finance is a journey. Many of the concepts need to be internalized. Students need a textbook which builds a foundation which is clear and concise. Finance will come alive if students supplement their learning with their own follow-up of what is happening around them. Follow the news and finance-related interviews daily. Then the terms and language of finance will become engaging, and this will make one so much more comfortable with living and breathing finance.
The global economy has seen a big shift in economic influence in the last 20 years. In year 2000, the US economy was 8 times that of China. By 2020, that number had shrunk to 1.4 times. In fact, on a PPP-adjusted basis, the Chinese economy is now bigger than the US economy. Alongside China's emergence, the Southeast Asian economies continue to grow rapidly. It is an amazing region with a total population of 650 million. Across Asia, we are seeing a different form of economic development with these young demographics and the mobile-first digital business strategies. With such major shifts and emergence of the much-mentioned Asian century, it will definitely be useful for our students to understand finance in the Asian context. I feel the most difficult concept for students in finance to grasp is the story behind the numbers. One big myth is that finance is just about numbers. In fact, numbers without stories are mere digits. On their own, they are not useful. By showcasing examples of influential Asian companies such as Alibaba and Tencent, the Asian edition is intended to help students understand the nuances of finance from the regional perspective. We hope that this will help them apply fundamental financial concepts in the context of local markets.
With a young and tech-savvy demography, Asia has been digitizing faster than most other markets globally. Because of that, the average retail investor in Asia today no longer learns about a company just from public disclosures, but also rich and up-to-date information sources like social media. Corporate governance in Asian companies tend to be internally focused. The best practices in Chapter 13 help our students address those agency costs that investors care about in order to prevent value erosion. Investors love returns but dislike uncertainty. The volatility in stock returns is a risk that is perplexing to investors who cannot handle uncertainty. Students will learn that volatility is not only explainable, but also an opportunity for higher investment returns. The suite of connected frameworks that we introduce in this book help students identify, manage, and capitalize on volatility.